only mode.
All right, everybody. Ladies and gentlemen, hello and welcome to Nadex. My name is Philip and I will be once again your presenter for today's webinar. And yeah, as usual, please feel free to put any questions that you might have into the small questions box that you can see on your screen. And I'll do my very best to answer those questions as we move through the webinar. Right now, I would appreciate a very short yes or why in that set questions box to just let me know that both the audio and the screencast are working properly, that you can see the slides changing, and that you can hear me well. Perfect, everybody. Thank you very much. Really appreciate the feedback. Yeah, today's session, as usual, is scheduled to run for about half an hour. And before we get started, there are our usual risk disclaimers that I need to make you aware of. So please take a moment of your time to read through them carefully and make sure that you are okay with them. Essentially, this says that trading, of course, involves risk, and you should understand those risks and the risk associated with the instruments you're using before you are getting active in the market. As neither Trade with Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only. So please make sure you're okay with that before continuing with the webinar. And, of course, we also have an additional risk warning, this time directly coming from Nadex. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not indicative of future results. Nadex instruments include forex, stock indexes, commodity futures, and economic events. Nadex binary options and spreads can be volatile, and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. That being said, and I hope you're all okay with that, let's have a look at today's agenda. We want to be scanning the markets together. We want to get a feeling what the markets are doing. And of course, you've come to this webinar because you want to see how we here at Trade with Position trade those markets and what we see on those charts. And so we are scanning those markets and looking specifically for those kind of setups that might present us with trading opportunities. And we also want to put some trades on here today. Keep in mind, it's really just for educational purpose. Just because I tell you guys I like a certain market, I like a certain chart, I have an idea of what this market might be doing, I can be totally wrong. And this is pretty much what trading is all about. You don't have to be right 100% of the time. You just should be right more often than you are wrong. And when you are right, you should be winning bigger. Those are the two components that give you an edge with your trading. Being right more often than wrong, and you will be wrong. And that's just part of the game, and there's nothing wrong with being wrong. But with having losing trades, it's really just part of the game. And I think the major challenge to become a successful trader is to learn to roll with the punches and to learn to accept those losing trades. So just because I think this market might be going up, I could be wrong. I don't know what's going to happen next. I just know that over a large sample set of trades, I'm right more often than I'm wrong. And the winners are bigger. And those two things together is what makes me a successful trader in the market. I don't have a crystal ball and I don't know what's coming next. And for that reason, I will always be placing trades in both directions so that you guys know and see, and cannot say, hey, you traded in that direction, so this is where you think the market is going. I give you my analysis, but it's really just keep in mind, it's just what I'm seeing on those charts, and I could be totally wrong. Now, that being said, I hope I'm not wrong, and we're just getting started here. Let's have a look at the euro against the US dollar first. And let's make it already larger here. All right, so here we are. Euro against the US dollar. Let's start here on the weekly chart. I want to have a look at different time frames, and those different time frames should always paint me the same picture. I want to get the same idea once I'm looking at different time frames. And on this weekly chart, I can see that the market has started to form new higher highs. and also the market has started to form new higher lows. And that's it. That's all I need to know to see and know that this market on the weekly chart, on the weekly time frame, is in an uptrend. Further indication that this market is an uptrend is our moving averages start to slowly fall back into line. We can see that the 10-period moving average is already trading above the 20. It has also now crossed above the 50. I don't care about this cross. In the end, what I want to see is something like this area here. All moving averages in the correct order, 50, 20, 10. For an uptrend, I want to see 10, 20, and finally the 50 should be here somewhere below. It's not what I'm seeing here right now. The 50 has not fallen yet into place, and for that reason, I would not consider taking any bullish position here on the weekly chart. It's just that all the factors that I need for my setup are not there yet. However, the big picture, the vibe that I'm getting from this weekly chart is clearly that this is a bullish market. Let's have a look at the daily time frame here. And on the daily time frame, and let's make it larger again, we start to see this fanning pattern, which I just have described. We can see the 10-period moving average above the 20, above the 50, and now even also above the 200. This is what I want to see, and you can see this fanning pattern here with those moving averages spreading apart, separating, and you only get this picture here if you really have a strong and consistent trend, and a trend that has been going on for quite some time. What I really like about this chart here right now is market has pushed higher. We have moved higher to form a new higher high. But at that point here and also here, we have been quite a bit away. We already have had some distance between where price was trading and our moving average buy zone. And the buy zone is just the area between and around the 10 and 20 period moving averages. It's not really something precise. It's just here, price is too far away from the moving average buy zone. We call this price is overextended. And I'm not really looking for trading opportunities there, because I think if price is overextended, it tends to snap back to equilibrium price levels. And this moving average buy zone or the sell zone in a downtrend help us to identify those price equilibrium levels. And what we can see here, price just has pulled back. Where did it pull back to? It pulled back directly here into our moving average buy zone. Now, what I'm looking for here is now a small bullish candle on the daily chart to initiate a trade on the daily chart. However, what I'm seeing here is currently a somewhat bullish candle. It's not perfectly bullish because those higher prices, and let's make it even larger, those higher prices that we already saw here in euro against the US dollar, they have currently been rejected by the market. Price has pulled back a little bit. But why is this a bullish candle? You might say it's just the green body. Yes, the green body is a plus, but it's really what had to happen for this candle to look the way that it does. And you can see the price tried to push lower. It tried to push significantly lower. But in the end, this hasn't worked out. In the end, all the buyers came back and they bought way more aggressive, and all this buying was able to push price not only back to where it opened, but also higher. For a perfect bullish candle, it should be here closing very near the top of that range, of today's range. This would be the most perfect bullish candle. Now, at least in that context. Now, what I really like about this current situation here is I have put that level here on my chart. Now you might be asking, where is this level actually coming from? And now I have to zoom out, and we start to see the price has reacted to this level here several times already in the past. Not precise reactions here, but pretty precise reactions here and there. And sure enough, price pushed above this level. And please note, we have this small red, or we have this red candle sitting here. This first test of this level was rejected by the market. Price broke this level, pulled back immediately, and pushed higher once again. And now it's coming back to test this level once again. Those horizontal lines, those horizontal levels, those are leading indicators. Why is this a leading indicator? Well, I have been able to draw that line, at least here, maybe there, but from that point in time on, that line was on my chart. And for that reason, when price came back and tested this level here, and again, and again, and again, and once more, and so on, I know now that the market, for what, I don't know the reason why, and I don't care. I just know Mr. Market watches this level, and if price approaches this level, something tends to happen. And this level was on my chart already here back in the time, and now price is there, and I'm pretty sure that price will once again react to this level, and see what price has done here. Price has reacted to this level once more. It tried to break below, didn't work out. Price came back, pushed higher, and now price is, at least that's what it looks like, price is trying to start the next rally higher, and this would be a new higher low compared to this low, a higher low, we have higher highs. And as long as we see the series of higher highs and higher lows, the basic assumption is what is in motion stays in motion. And if this is an uptrend, I just assume that this uptrend might be continuing. And for that reason, I'm looking now for buying opportunities, potential buying opportunities here in this what currently is an uptrend. Does this mean the market can reverse and break through this level and fall back and create the short opportunity of a lifetime? Sure, it can. But I just know if I'm collecting all my small favors, my small advantages, my small patterns on those charts, the moving averages, the trend, price pulling back, price reacting to this level, and so on, collecting a list, many small factors, those should make it able for me to win those kind of trades more often than I lose them. And yeah, as I've said, that's pretty much the edge when it comes to trading. Eric is asking, what sign would you get if the market has an unexpected change? It's surprisingly simple. Let's make it larger. Let's have a look at this here. The basic idea, if you were to trade that setup here, and it's not a perfect setup, because for a perfect setup, that candle here is way too large. I'm looking for small candles here because those small candles give me an outstanding reward to risk ratio. And this candle is way too large to give me that outstanding reward to risk ratio. Just keep that in mind. But apart from that, it's the right candle in the right place. It's just the size that's not working. Now, how would I be trading this? And Eric, I will be answering your question here. Just stay with me for a moment. The idea here would be that I want to enter this position on a break of the high of this candle, because the idea here is this was just a pullback. The pullback is over, and now the market resumes its direction, which is in an uptrend up. However, this is where I want to enter that trade. If the market is going against me, however, I must have a stop loss in place. I always trade with a stop loss. Most of my trading really is fire and forget. I submit my orders, everything is there, and I just walk away from my desk, and I don't care about the markets after submitting the orders. And for that reason, I must have that stop loss order in place for conventional trading. With Nadex contracts, you can work with stops, but you don't have to, because you have this risk-limited nature of those Nadex contracts where you can't lose more than what you deposited when you opened the transaction. Keep that in mind. So this is really just for the conventional type of setup. Where is my stop loss location? My stop loss would be just 1 pip here below the low of that candle. Why is my stop loss here? The stop loss is here because I think this is a retracement and it's over. We have now trend continuation to make new higher highs. But I could be wrong. And I will be wrong in that moment when price now trades below the low of that candle. Because then this is not the new higher low. This could be the new higher low couldn't be found, or even the price would completely move against me and drop even further. But this is here, the idea is I'm basing my complete trade on this hypothesis that this is the new higher low and we have a trend continuation up. And so, Eric, you have been asking, what is the sign that I need to get if the market is doing some crazy stuff? It's just price trades below the low of what I think is the new higher low. because then I know my basic assumption for this trade. That's the higher low is no longer there. It's no longer valid. And suddenly I no longer have a map about what's going on there in the market. And this is perfectly fine with me. I just take a step back and I'm watching from the sidelines. If this trade hasn't worked out for me at that point, either I would have been triggered into that trade, so nothing is lost, and I just shrug it off and look for the next setup, or if I've been triggered in, I have a loss. But my risks and my position sizing, my risk and my money management made sure that I just lost, at least for my account and my trading, I just lost 1% of my account, and I couldn't care less about losing 1%. You have to be consistent with your position sizing and your risk management, because this is how you survive those losing trades. And it's crucial that all your trades are comparable, and so you always want to have the same risk on all of your trades. What you don't want to have is that one losing trade wipes out the gains of 10 winners. That's a very bad ratio. You don't want to have something like that. You want to risk the same money on any one trade, and you want your winners to be bigger. Remember, we want to win more often than we lose, and we can't avoid losing trades, and we want to win bigger. So risking $100 to make $10 doesn't make sense for me. I want to win at least, or at least I want to be able to make as much as I'm risking. So if I'm risking $100, I want to be able to make $100. Preferably, I want to make 150 or even $200. But this has to be a balance. I want to win more often and I want to win bigger. Now, Eric, I hope that answered that question. And main idea here from that chart is, yes, this is definitely an uptrend. We have pulled back. We seem to have found support here at this level. So once again, the idea is that we are getting here some kind of bullish environment and looking for potential trading opportunities. Let's drop down with our time frames. We know the weekly looks potentially bullish. The daily also looks bullish right now. What is it that those lower time frames can tell me? And pretty much here we see in the past something that just a few minutes ago, this is a 15-minute chart, and this is almost a perfect example. You see the push higher, you see the pull back, you see the pull back. Where is it pulling back to? To the moving average buy zone. You're creating here a small bullish candle in the buy zone. It could be a little bit more bullish, and after that, it trades higher. Now, this is also a perfect example that currently it doesn't look like this trade would be a winning trade in the end. And that's just part of the game, as I've said. How would this have been traded? You just would have entered on the break of the high of that set candle. The low would be here, and that would be my stop loss level. And my first profit target would be around about here, a 1-to-1 distance. Right now, I would not be watching that market. I would not be watching that trade. I would have been triggered in, and I would be away from my desk, because I know I have my orders in place to capture profits and to take me out if the market is just not going my way. Let's take this market and have a look how easy it would have been to trade, or how easy it is to trade this market here with Nadex contracts. Let's have a look at the binaries here. We're going here to forex binaries, and we're looking at euro against the US dollar. Now you might be saying, wait a minute, now as we're breaking here probably below this level, this might be not the setup that we're teaching, but you think this is a strong sign, market might be going lower. Let's just have a look at what's going on there. And we're looking here at all right, let's pick this expiry cycle here. You can see we still have 1 hour and 40 minutes left in that contract until expiry. And you could now say, okay, I think this is a lower high compared to this one here. We're losing momentum. We can also see that we're losing momentum here looking at RSI and MACD. So your battle plan might be, okay, I want to trade this market to the short side. And so which contract is it that we want to take here or want to trade here? Now, quick tip, if a contract is trading at the money, which means the underlying market is trading at the strike price, this contract should be priced pretty close to 50. And so if we have a look at this contract here, this would be 111.76 as a strike price, and just look where the market is trading. It's trading precisely at the strike price. So you don't have to check those numbers. In those numbers, you can just go for the price and see, okay, that's the contract where we're trading pretty close to 50, trading at the money. Now, you might be tempted to say, okay, price could be going lower, even further. And so I'm going for a contract which is a little bit more in the money. And you might be thinking about selling this contract. Again, this is just for educational purpose. It's not a recommendation, and it's a demo account. And guys, by the way, if you haven't signed up for a demo account and want to log in, or if you have signed up and forgotten your credentials, that's the login page. You just see here login, and here forgot your login details. Just go there. If you've forgotten your credentials, hit that button, hit that link, and you have your credentials emailed to you, and instructions how to reset everything, and you're up and running within literally seconds. So just keep that in mind, or just sign up here for the demo account if you haven't done so. Richie is bringing up a very great point. Richie is saying the indicative price and the one on the chart are slightly different. You have to understand that you're not trading the underlying itself. Nadex has a pricing mechanism which makes sure that not the last quoted price, the last lucky punch, if you want to tell it or call it that way, is the one on which price on which option contracts will be settled in the end. No, they are averaging those prices. They have an algorithm to do so, and therefore those prices quoted here and the prices quoted used for settling those contracts are different. Go to the homepage, to the website of Nadex. You will find the explanation on how those prices are actually being calculated. And those prices that you can see here are definitely order book prices and those prices of other market participants. So keep that in mind. And Richie, if there are more questions after reading that website, definitely be in touch with Nadex. They are more than happy to explain the way they are calculating those prices. It's precisely defined and very well built. Perfect. Glad to hear it. Thank you very much. All right, so we're looking here potentially at selling this contract. I could be selling this contract now one time. I've talked about position sizing before, and the idea here is we're looking here at an account value, demo account of about 23,000 US dollars. Now, if I want to risk 1% of my account, this would be around about $223. Now, the idea here is that I could be just looking, and you can see my maximum loss and my maximum profit on that trade. And the idea is I could be just adding more contracts until I go over my 223. So right now here I could be trading pretty much 4 contracts right now at those price levels. I'm just placing the order now, and I'm filled. I'm short 4 contracts now. And you see prices trading below this market, and prices already starting to move in my direction here. But it's not the direction, it's not about that trade, it's just how easy it is to place that trade. So one thing, keep that in mind. Next thing is, okay, I want maybe to actively manage that position. Are those Nadex contracts fire and forget? No, they aren't. I can actively trade around my position. I could now go here and say, for example, okay, I have sold something for just a second. I've sold something for 48. So if price drops down to maybe 24, I want to buy 2 contracts. I want to close half my position, and yeah, just log in some profits and take some risk off the table, take some money off the table, reduce my risk exposure. And you can see I just can submit that order. It's not being executed right now. Why? Because it's a limit order. It will only be executed when another market participant is willing to pay those is willing to sell for 24 bucks. So, but this is how you can actively manage that position. Now you might be saying, okay, that's just here and let me quickly jump back here and let's pick a different time frame. You could be saying, well, the 60-minute chart looks quite different. We're pulling back here into a moving average buy zone right now. and over a larger time frame, I think I'm pretty bullish on that market. No problem. Over a larger, longer time frame, now we might be interested and looking here to, for example, to look at the daily 11 p.m. And you can see with this expiry cycle, we still have 10 hours and 34 more minutes left until this option expires. And if I think price is about to push higher, I could be a little bit more aggressive here and maybe go for something further out of the money. Price might be rallying over that time. And the basic procedure is the same. Now my internet connection stalls. Sorry about that, guys. Yeah, here we are. Buying for 25.50, and the idea is again the same. If I want to buy that contract, how many contracts could I buy to have a similar risk exposure to what I just had? Remember, account size $23,000, 1% of which is 223. And therefore, I would be increasing my position size here until the number that I see here is around about my risk per trade coming from this 1%. And so I could be just looking here at buying those contracts here. And you see I've also established here a long position. Play around with your demo account. It's very easy to trade those markets. Get a feeling how the platform works and how easy it is to manage those positions. And once you're good to roll, definitely fund your normal account and get started there. All right, I have another market that I quickly want to cover with you guys. Time is already flying. I want to have a quick look at the S&P 500. The S&P 500 have broken above another level of support and resistance. We have tested this level here, tested this level there, failed, came back, tested it again, failed, came back, and now we've broken it. And we've broken it, and after that we had a rather bullish candle. Not that bullish, but somewhat. Why is that candle not that bullish? Well, first thing, the size of the candle is not really that strong, and you can see how much momentum has been lost on those extended and reoccurrent tests of this level, and prices push higher. And you might think and guess we've broken above this level, now we should see a strong rally, shouldn't we? But this is not what I'm seeing here on this chart. What I'm seeing on this chart here is a market which has had an inside day, the day after the breakout. Currently it's just another inside day of that range. The candle is not that bullish at all. It's pretty indecisive. When is a candle indecisive? The upper and the lower shadow have approximately the same length. You have a small body. The color doesn't really matter, and it's just sitting in the middle of the range. And this just tells me this market currently, it just doesn't feel like moving higher. It's personally, if I have to make a guess, first thing, it's not one of our setups. So I wouldn't be trading this market in my own account. But the potential that I see here on that time frame is much more of a retest of this level. And just think about it. This level is sitting at pretty close to 2,400 US dollars or index basic points. We're trading currently at 2,412. That's $12, 12 times. Those futures move in quarter ticks, 25 cents. So 4 times, 48 ticks to the downside for a retest of this level. And if we have a look at those markets then here on the lower time frames, we might start to see that something might be setting up. And guys, one perfect example here, just looking at this 15-minute chart here of the S&P 500 E-mini futures contracts. Again, coming back to the question that Richie mentioned, it's not, you're not trading the E-mini futures here. Of course, the price is based on the pricing of the index itself, but there's always a small difference. Keep that in mind. What I wanted to tell you here is just see this market is range bound. Yes, we made lows, we made highs, but right now this is all pretty much range bound, and I don't have a clue what's coming next. I don't know. Nobody knows, but if I'm seeing a move like that here, I know we have pressure, we have momentum to the downside. There I have an idea what might be coming next. Here in this area, I don't know what's coming next. And I don't care if this is a lower low compared to that one here or a higher low compared to this one there. For me, it's just a big mess. And if I see a big mess, I move on to the next time frame and move on to the next market. Don't try to be over precise and over analyze this stuff. It's just ugly. And if it's ugly, I don't want to trade it. I want to have simple, boring setups and simple and boring trades. So that's my picture, what I'm seeing here for the S&P 500. If it really was a strong move to the upside, price action, those last two sessions should have looked pretty much differently, especially with the Memorial Day, public holiday in between. I think we should have seen much more action here. The moving averages have pulled together. Loss of momentum, nothing really strong going on here. So I'm definitely not a bull of the S&P 500. All right, guys, switching back here to our presentation because time's already up. That's pretty much it for today. Thank you very much for tuning in. I hope you enjoyed today's session. You learned something new. And yeah, you found it useful, got some new ideas, something new to kick off your gears and get you started thinking and looking at those markets maybe a little bit differently. Sign up for Nadex if you haven't done so already. Register, sign up for that demo account, get used to the platform, see how easy it is to trade on those on the platform, and also have a look at the spreads. We just covered binaries today. Spreads also very easy to understand and great product to trade. A little bit different, but also has a lot of potential and opportunities. So give those a shot as well. After this webinar, there should be a short survey. Any feedback that you have for us would be really appreciated. We want you guys to go away from that session and say that was time well spent. And if we can do something to increase that or improve that experience for you, please let us know. We're more than happy to listen to you and give you the content that you want to see and hear.